Hello, everybody. My name is MrStormCrow, and it has been so long since I've actually made a YouTube video. I've made Twitch content, YouTube live streams, but I have not made a YouTube video in probably about 6 months. So, welcome back to anybody who's returning in. If you are new and maybe you got this video from a suggestion, I hope you can subscribe maybe and check around my other content if you'd like. But today, it's a little different. We're talking about finance. Because this is kind of important to me. I think I have to say something just because I feel the urge to. And when I have the urge, I'd rather not keep it in me. But before I really continue this video, and this will be a little unscripted, so my apologies if I make a mistake, is that I am not an economist. I am not a CPA certified, whatever, an accountant, or any means. I am not a stockbroker, right? So I want to give you that just for the context of what I'm going to be showing and talking about. But I think personally, we either are probably going to be in the worst bear market of the decade, or probably a recession, either or. I know some of those words are intermingled, sometimes they're the same in some contexts, but I really do think we may be in probably one of the worst stock market crashes, possibly, maybe, or yeah, in general, because I know a lot of real estate, cryptocurrency, and all these things that we value are interchanged and usually go down when the patterns show. But I'm going to sort of showcase some things. Now, never mind this. This is my stream overlay. Aha. I haven't used this thing in a while, but here's the kicker, by the way, if you didn't know. Now, forget all the other factors, the fact that we are in a world war, the fact that we do not have enough supplies, right? When you go to Target, guess what? There's nothing, and that's because there's a shortage right there, okay? But here's the kicker. You know all those tech stocks? This might be the first time in earnings where they are not actually continuing the gains as they should, which also makes a bear market. Now, I'll get into that in a little bit, but I want to show you some patterns. These are just stocks that everybody likes. Stocks that are American funded, right? These are the stocks that we usually like to have or to compare. And here's the S&P 500. This does not look good, does it? I think you can probably take those two patterns right there and a couple of patterns and probably say that this is going to be in a bear market. Now, again, you're going to be like, Mick, this is just Google, you idiot, and I understand. But I'm going to show you some other stuff. Now, whoa, that's another thing. But NASDAQ, right? There is a whole bunch of shenanigans that's going on as well. But I think it's the NASDAQ 100. This is also going down. This has been going down for a while, but we never thought that the S&P 500 would suffer this much comparatively to the NASDAQ 500. And I think it was Google. Google has released their earnings report. Let me actually show it here. Reports Q1 2022. One of the things is that it dropped Google. And everyone's very scared because if Google is going down in earnings report for their, I think it's either revenue. I believe it's the revenue. Yeah, revenue. Then that means that it's probably going to go down for all the other tech stocks because it feels as if we overestimated our belief in that company's longevity. But also, one of the problems is we have so many factors that are causing a stir, right? We have a logistics problem. We printed a lot of money, believe it or not. Did you guys know about that? We printed more money ever than like probably the whole entire existence of history in terms of like the Federal Reserves or the what is it, the Irish Federal Reserve and whatever. They printed the most money possible on paper. And what we're going to have, right, is we're going to have inflation. Inflation is going to hit. And we've already heard that word, inflation, right? But that is an economic thing. People try to complain about and blame it on people, but it's just an economics thing, right? So let me just kind of show you the percentage. 2022. What is it? We rose probably 7.9%. It might even be more. Because again, the way they do inflation, supposedly I heard, is they get a couple of items and then just like compare them over like a certain amount of time. But again, I have to go read up on those studies. But the annual inflation rate is like 7.9%. That's pretty hefty. And so we are going to have some problems with that. Because if everyday consumers can't buy stuff anymore, right, where they're just saving more money, well, guess we're, companies won't really profit as much as they before. So this is a little, let's just say, problematic, right? We got COVID, we got a world war going. And again, there's been economists that have actually stated that it's very risky. Like, we're going to get a hard landing. Now, what typically happens to a recession, you probably are asking if you're new. Recession, generally everything goes down. Real estate, you have stock market, right? Like, again, that's another thing. You ever looked at real estate? Everybody's selling right now, right? Like, what is like, well, let's say I go to Redfin, right? Real estate, it's at an all-time high, right? And I think a lot of people are really trying to sell. I wish I could give like a zip code that I don't know. What's a zip code in Minnesota? No, this is something I found out. Let's actually find Detroit zip code. This was a state, or sorry, a city that was the victim of the '08 crisis, okay? So I'm just going to do an example. This is a little unscripted, so my apologies. But I'm going to give you an example of how inflated these prices are. Detroit houses typically, I was almost about to say another word, are typically very, how should we say it, cheap, and specifically in Detroit, houses are the price. But look at these houses. Let me see if I can find one for sale, actually. We're looking at $200,000. Like, these houses in Detroit are this much. To me, that's astonishing, because these houses back in the day were like cheap as dirt, because no one wanted to live in these cities after what happened with like GM, General Motors, okay? It was not a great time to be alive in '08, right? Because a lot of jobs were lost, right? You're going to have massive unemployment, because once these companies suffer, people will suffer. There's going to be massive layoffs. So I would recommend kind of knowing your expectations, if that makes sense. Again, I wasn't really alive financially in 2008, but I know a lot of people were hurting, and I kind of read up a little bit on that. Now, another issue that we have, if I can find it, oh yeah, is like, oh yeah, like probably, I guess we'll kind of shorten this because I don't want to make it too long. Is like, maybe you're wondering what should you invest? Generally, like at this point, hard assets are probably the way to go. It really depends. Like, you can invest in whatever, but I know mutual funds right now, let's see here. Yeah, mutual funds are, I know, usually the cheapest. I'm trying to think of what, like, probably the cheapest is for the S&P 500. But the thing is with these, and I've had my experience. So, anecdotally, I've had really good experiences with, like, Schwab S&P 500 index. Or no, it's a mutual fund, my bad. Not an index. Mutual fund. Yeah, these things are pretty cool. SWPPX is pretty cool. And these are, like, your safest bet, because even if things go down, you're not going to have that much of a death. But yeah, I mean, I felt like we already went through a couple of stock market crashes this year because we had COVID, and then we even had a little bit of stagnation, but no one thought like this would break the price ceiling, or sorry, not the price ceiling, the price floor. Because once it hits the price floor, we pretty much know for sure that things are just going down. And generally at this point, it's safe to say that once this happens, probably real estate will be the second to fall. I don't know which direction, because I'm not a fucking time traveler. I don't know. Like, I can't predict this stuff of which is going to fall, but I know real estate is usually the last. And considering it was at its highest probably this year for real estate, comparatively than stocks or anything, or even cryptocurrency, real estate might fall next. And what generally will happen, now this is a little different because '08, I think, was more of the banks, and this could just be a bubble, right? What's going to happen is it's going to be a bubble burst for like stocks and everything. What might happen is just things get cheaper. But they're not necessarily going to crash like '08. So I'm not entirely sure. No one knows, because if we knew, we would obviously be rich. Now, should you make a put? Maybe. But I just want to let you guys know that with all these factors, I would say that we may be headed probably towards a bear market for a while, at least. That I can guarantee you, or at least can tell you just directly from finance, that might be what we're headed. And it's not going to be fun. Make sure you have an emergency funds of a good amount, because I think that we will. I don't think it's looking good. I really don't. And it'd be kind of funny if I'm wrong. I hope I'm wrong. But it's just very interesting to see how bad things are getting. Because again, we printed what, like, let me actually show, because I know there's graphs. Like, we printed so much money. Like, the dollar is technically decreasing value. It's still the strongest currency, which is lovely. But we printed probably the most. Is this it? Oh no, I remember generally there was like a graph where it would show like how much money we've printed. I probably should have gotten that out, at least for this video. But I know that like we printed probably the most money in history, and that obviously has a tie with inflation. Especially with COVID. Like any other like timeline or history, like this is probably insane. It's like never been done before. I feel like 2.2 trillion. Oh yeah, there's 2.2 trillion stimulus bill, and there's more and more. Yeah, like that was 2.2, but that was in 2020. I think we technically had a stimulus bill in 2019. Let me see. Let's see if we did. But I think they're still doing some for Social Security, funny enough. So it's pretty insane how we're still technically doing stimulus bills, and we haven't kind of learned. Yeah, so 2020 and then 2021. So it did technically happen because that was the American Rescue Plan Act of 2021. So it's really interesting to know how screwed we really are with inflation, okay? Trillions of dollars is pumped into the stock market, or at least the economy. And now we have inflation. Now we have war. So I think that we're probably gonna have a bear market for a little bit. Doesn't necessarily mean we'll head into a recession or like a stock market crash. I don't know. I feel like we will be in a bear market, but I don't want to guarantee it. But I will say that I've sold some stock because I'm not confident that we will recover pretty quick. But yeah, like if you want to make, like, let's say you're new to the market, I don't think you should pull out because you still got years to go, right? If you're like 20 or 30 or whatever, or 40. But I would recommend holding some money in. Like, don't if you got like an automatic like $200 injector into your like brokerage, I would recommend. I shouldn't say recommend because obviously I'm not. But I'll just say if I was kind of like that, I would kind of just stop that like transfer every month, right? Because I'm not confident things are as stable as they should be. And I'm kind of surprised with that Ukraine war, nothing happened, right? Like it's happening now because we even gave them more money. So, but I think that things are going to be quite interesting. And we'll have to see just where the market takes us because it's really insane, just the things that are going on. We have like a multitude of factors. And then not only that, stocks, the earnings are not looking great. And if that happens with all these other like stocks like Amazon, Microsoft, Google was already one that happened. Our report doesn't look good. We may just be looking at a downward trend even with that. So regardless, that is it. Yeah, I know it was a random video, but I hope you enjoyed. Take a look at my other content. I don't know why I said it like that, but take a look at my other content. I have a link tree below. If not, there should be a Twitch, Twitter, and YouTube. Sorry, I think what was going on there was I was gonna, how should I say, pause for a minute, maybe screw around with my mouth, like in terms of what I was about to say, but then I kind of technically fixed it by putting on an accent. But anyways, I'm sorry. But regardless, this is a little unscripted, but I'll see you guys in a little bit. Bye-bye.